What's up, everybody? Michael Silva here. You're watching the Stock Market Brief Show. Today's episode, I'm going to be sharing my thoughts on the current market conditions and what I kind of expect to see potentially play out here. And I'm going to show at the very end of this episode a seasonality chart to kind of tie everything together. Let's get into this episode. Welcome back to the computer, everybody. If you're new here, first and foremost, welcome to the channel. If you've been here before, you know what to do. Hit that thumbs up. And if you stay till the end, oh, see, that's a better thumb right there. That's a way better thumb. Yeah. The last couple of videos, you guys have been hitting that thumbs up, and it really does help the video get out to more people, so I really appreciate it. If you're new here and you like these type of videos, you know, after you watch it, consider subscribing to the channel and also hitting that thumbs up. It takes a long time to put together these videos and share this data with you. So let's just go ahead and hop right into it. Enough of that spiel. We are looking at a relative strength line from growth to value. And I want to start here to really just the basis of my thought process of what could potentially take place. Okay, we are looking at IWF over IWD. This is a relative strength line. For those that don't know what a relative strength line is, it just allows us to see what's performing better from a relative standpoint. And as you know, coming into 2022, if you're in the market, you know that growth stocks, they've been getting pretty hammered to the downside, and value has been outperforming growth. And now the reason why I'm showing you this chart is because applying a 10-period rate of change allows us to see potential turning points or overextensions when maybe value outperforms growth too fast and too furious, or growth outperforms value too fast and too furious. And what we're seeing right now is this relative strength line heading down into this minus 5.18. Okay, and when it gets down to this minus 5, we've seen a few times where that is a turning point for growth to start picking its legs back up off the floor and start outperforming value stocks from a relative standpoint. So if you look at these blue vertical lines across the screen here, as you can see, when value was outperforming, heading down into this green line, and then came down and turned back up through it, well, this line went up. And when that line goes up, it says that growth is outperforming value from a relative standpoint. And you can see here, plow here, it went up, it came back down, then plow again when we got that other one, plow, and plow. Okay, and we haven't actually had value outperform at this rapid rate of change for quite some time, actually, since May of last year. And now we're getting back into this kind of overextended territory. So it can keep continuing to go down, but when it starts turning back up, that would be a good indication for us to potentially pay more attention to growth, as value seems to be the belle of the ball right now. Okay, so I wanted to just point this out that yes, value has been outperforming, but growth, you know, we're getting a little overextended here where growth might see a little bit of a pickup. Okay, and why is growth, you know, just underperforming value so much right now? Well, we've been talking about this 10-year yield breaking out of this downtrend right here, and we've been seeing a large rapid rate of increase. It's up 14.62% just for the week so far, all right? And we're coming into, obviously, a previous area of resistance. Can it go higher? I mean, if the Fed really does what it says it's going to do and stays down this path, then I don't see why it can't, right? The market's already pressing higher at this particular point in time. Now, what I found interesting today was, well, yield curve, the 10s and 2s, those actually turned back down, and then also the 30 and 5 turned back down. So that means yield curve is getting tighter, contracting, okay? And the more that it flattens, the possible, you know, closer it gets to a potential inversion, which is a good recession indicator, but it's still pretty far off at this point. Okay, so yes, the 10-year yield's busting out. And what has that been doing? It's been putting pressure on mega cap tech stocks. All right, but today it slowed down just slightly. And that's a key thing that I want to pay attention to, is the fact that the 10-year yield, it's slowed slightly down. And I'll show you that here momentarily on a chart. But you can also see that on the heat map, well, you can see kind of more darkish grayish. Okay, that means it's closer to, you know, it's slightly down. But when it's bright red, that's when it's like massively down. And really the big down mega cap stock today was Apple. Whereas, you know, Microsoft was down, but Google was relatively flat. Adobe was relatively flat. Amazon was down, but relatively flat on the day. And then you had Nvidia making a little bit of a comeback, and Facebook also had a decent day there, okay? Now, when I pull up the S&P 500 chart, we talked about it potentially coming down to the 5-day moving average or the 50-day moving average, and it came down, it tagged it if you were ready to buy it. Cool, awesome. Does that mean, oh yes, it's going to fly back up to the top? No, that's not what I'm trying to get at here. We're pinned actually between the 20 and the 50-day moving average. Okay, so the bears have a strong possibility to get some ground. But what I want to call out here is just look at that candle. It just goes to show you that, yes, you have a very strong day to the downside, and then all of a sudden, this is very decisive to like super indecisive, right? It's basically telling us, no, well, let's get back up. Wait, no. Yeah, let's get back up. And then you close right there at the, where it opened. And you just see this, a long upper wick at the top and a long lower wick at the bottom. So there's a lot of indecision, which tells me momentum is slowing to the downside. And this makes sense because these blue lines here, that's actually the upper edge of the expected move that the options market priced in. And this right here is the lower edge. So to see it do the same thing tomorrow in its little, place of happiness, you can't, I would not be too shocked. But I also wouldn't be shocked to see it bounce back up. I wouldn't be too shocked, okay? I would be shocked if it starts closing below this and getting back below the 50-day moving average, which is very possible, right? Especially if the 10-year yield wants to continue perpetuating itself up, and up. Now, if you take a look at the Qs, what do we got going on? Still sideways range. Now, what I want to call out here is you have a big range decisive candle, a big range very decisive candle, big body, smaller body. And the upper wick shows that basically, yeah, we had, there are some bulls here still. They're trying to get some ground. And it actually closed with the green body, so it went red to green, but it didn't really pierce through this previous trading day, so it makes it not that aggressive. But you can see it's still here at a previous area of resistance, and it acted as support multiple times. And we've been coming down like boom, boom, and boom aggressively. So to see it bounce back up, or even to the middle part of the range, would you be shocked? I would not be shocked, right? That's range trading. Bam, bam, and then you play into the middle of the range. It's trading the range. It's not trending. I mean, technically we're still an uptrend, but in the short term, we're just trending sideways, okay? Now, this is where it gets interesting to me. And this is where I kind of want to, tie some of this stuff together here. This is the TLT. So we talked about the 10-year treasury breaking out, the yield breaking out. Now, if we take a look at the TLT bonds, we've been also in a sideways range. And now we're coming towards this lower range. Today we gapped down and we pierced through this previous red body right there. Okay, and that to me tells me, this piercing type pattern says, the bulls might be stepping up here as this is forming in this previous area, this zone of support. So it's very possible to come right back up to this middle of the range, which is, 146 to 147. Now, if that takes place, given what we've already went over, right? This is moving into a previous area here and around the 200-day moving average. That would back off, okay? That also lines up with this, right? Growth has been being crushed, and typically growth stocks do better, right? When the yield comes down or doesn't raise at that much of a rapid rate of change. Okay, so the heat map might all of a sudden start seeing some green stocks. And if you start seeing some green stocks, these big squares over here, well, guess what? The S&P 500 most likely can either go up a little bit or trend sideways because it's really driven by like 7 stocks, okay? And then same with the Qs, right? If that's the case, the Qs will go up. All right, so hopefully that makes some sense. Now, back to the TLT thing. Now, if you're part of the Discord group, you saw this notification. I did it before this little breakout right here. But I also was calling out on the 15-minute time frame. We had a positive divergence, falling wedge. It's in short-term bullish context under that declining 5-day moving average. But we had a tight little bottoming pattern here. We broke out of that. We consolidated here, and then we started breaking above that 143.25, I believe the number was. And, when we closed, where did we close? 143.29, slightly above it. Okay, it started breaking out towards the end of the day. So that's a good sign going into tomorrow for bonds. So if you are looking to go long something, potentially keep an eye here because there could be some traction more to the north side. That's might head up a little bit higher here. All right, nothing's guaranteed, but like I'm saying, and what I'm seeing is things are overextended. We have these narrow body candles. The momentum is starting to lessen here. starting to slow down, which could represent it's potentially taking a breather, bottoming, and going to consolidate sideways to have another move to the downside, or we might see a little bit of a relief bounce, okay? And now this is also very interesting because when the 10-year yield goes up higher, that benefits banks, right? 10-year, 30-year, right? Banks, they borrow short-term, i.e. deposits. They lend long-term. So when the 10-year yield goes up, the 30-year yield goes up, banks have been doing really well, right? Both financials and energy have been doing very good so far year to date. So what happens if the TLT starts moving up and 10-year yield starts to subside or go down? Well, we might have a little bit of a breather period in financials, or they might pull back. Here's the KRE. This is the regional banking ETF. You can pull up the BKX too. The KRE is easily tradable. And what I got going on here is the slow stochastic is starting to turn down in that overbought territory at this particular point in time. It's in bullish context, right? It's been rising rapidly, but we have a tight wedge pattern on a negative divergence. Very similar to TLT, we have a bullish falling wedge with positive divergence. So if this starts breaking out, I would imagine that we'd start to see this come in a little bit. And if it comes in, where could it potentially go to? Well, we're still in bullish context. We have a 5-day moving average. It's inclining. We have a little gap right here. So yeah, 74, 74.50. I'm not saying it's going to crash down. It's possible, right? But yeah, maybe it's going to take a little bit of a breather. That's just my thought process, all right? And now if we take a look at some of the tech stocks, look at Microsoft, for example. It started off slow, right? So first off, let me walk through these candles. Decisive candle, slowed down, very decisive candle, and then all of a sudden you see some shorter, narrow range bodies. Momentum is slowing down, okay? And then all of a sudden, momentum picks up, a little bit of indecision, more momentum picks up, super explosive, and now, so it's basically fear is slowing, and then bam, fear is increasing. And now we have a little short body candle in a gap fill area, okay? And a previous area that was resistance. So this could be an area of support as it closed down below the lower Bollinger Band, and below that 100-day moving average. So pretty nasty looking. This candle is known as, I would just call it an inverted hammer candle. And those are typically reversal candles. So if we had a big green candle like this tomorrow, guess what that is? That's a morning star reversal pattern. Needs confirmation to the upside, okay? But that is what I'm seeing. So as these big mega cap tech stocks are coming into areas of potential support, we see the 10-year yield going into resistance. We have the TLT coming into support and potentially moving up. And we have the financials and even energy getting a little overextended. They might come down. I would imagine that we're going to rotate back into tech. It doesn't mean that it's going to be a recovery, but maybe we get a little bit of a bounce. That's my thought process. Okay. If we keep on going on, Google, same thing, right? Huge decisive candle the other day. Slow down right here with the inverted hammer. All right. Keep going down. Tesla, consumer discretionary. Actually, that's a big hammer candle. Closed below the 50-day moving average. But you can see here, I mean, it's typical. If we have a move like this, on this specific day right here, I said, don't go chasing that move. That's not something I want to chase, right? And then guess what? We pulled back. I would like to see it base out, but a nice hammer candle, maybe we, if we take out the top, maybe we can close into it a little bit more. But as it stands right now, we're still range bound. Boom, boom. We actually filled this gap, which we talked about, and then pow, went up right up to the upside, back to the upper end of this range. Okay? Now guess what? If you shorted it, remember what we talked about? How do you play a range? You short on the upper edge into the middle. You take profits. If it goes down to the bottom, you play it into the middle. And then you take profits. And right now it just did that. Boom, and now you're seeing a hammer candle. Okay, that's what people are doing. People have done that. You can see it came down, boom, and all of a sudden some buyers step back in. That doesn't mean that it can't head down lower, right? But you can see that here by just looking at this bottoming tail. And NVIDIA, very similar situation. It has a high, lower high, lower high. But you can see here, the bulls are still holding up their little camp right here. No, you can't take out my defenses, my little castle, right? Their little camp. You had this gap. The gap hasn't even got filled yet, so maybe perhaps it's come down a little bit more and fills the gap. All right, but as you can see, it's come down here and boom, explosive move. Come down here, boom, explosive move. Come down here, explosive move? Maybe. But you can also pay attention to this. It's actually every explosive move has been getting smaller. So maybe it does bounce up. Little relief rally. Maybe retest the 50-day. 50 days still inclining. But that doesn't, you still need to be very careful. All right? I don't see really great trade setups at this particular point in time in the daily time frame because of all this volatility. I like to see volatility contract. And right now it is expanding. If you take a look at the 11 sectors in the S&P 500, energy and financials were up leading the way. All right, and we already talked about the rising wedge in financials. What I want to point out now is energy. Let's look at the candles, okay? We broke out of this downtrend line. Yay! Energy had a huge start to the year. We're trading outside of the upper Bollinger Band, okay? That's pretty dramatic move, in my opinion here. I mean, to anybody's opinion. But what I want to call out is we had one decisive breakout. Boom. Okay, look at the body. Smaller body. Still decisive. Nice big gap up. Smaller body. A little bit of redness. Closed. Where? In the same place that it did the other day. And then here, more indecision. So does this mean indecision and smaller body? Does this mean that it's going to come down right away? No, that doesn't mean that. But the momentum is slowing down right now in energy. Okay? And we're getting a little overextended. So can we gap up? Yeah, if we gap up, are you gonna go long right there? Or are people going to sell into that? If you are a professional money manager and it gaps up to 61, 62, 63, 64, 65, whatever, and gets a massive rip, and you bought in on this breakout, if you're not selling there, you're crazy. You are absolutely bonkers, because there will come a time where a move like this has to go through a period of consolidation or pull back. How high can this go? Sky's the limit. I mean, we've seen crazy things take place. But if you're not managing your risk, which is the most important aspect of all of this, and taking profits when you can, like imagine taking this breakout and not taking profits. You're like, no, it's so good. And then it comes all the way back down to break even. Holy moly, that would suck. All right. Another thing I want to call out on energy, 15-minute time frame, negative divergence, kind of wedging right here, roughly wedging, but it is still in a a short-term uptrend. It's just getting aggressive, obviously, but it is curling up. So a little breakdown, yeah, it might take a little bit of a breather. So that's what I'm keeping an eye on going into tomorrow. Consumer discretionary, like we already mentioned, Tesla, but consumer discretionary also put in a nice hammer candle. And we've seen tech and consumer discretionary move hand in hand, because of these big mega stocks, mega cap stocks. I have such a hard problem saying that. All right, I'm gonna try to move through this a little bit quicker. We've got a couple more charts here. XLK, it's very similar to the Qs. It's going sideways, right? Big momentum to the downside. We have an inverted hammer candle right here, but we did close below that 50-day moving average. The PPO is pointing down. I mean, this is where breakdowns can occur. Don't get me wrong, but there's also a lot of fear right here, right now too. And this is what shakes up a lot of people, is these big volatility ranges. And you can see that here on the chart, right? Small volatility range, which is still kind of big to what we've seen. Bigger one, bigger one. It's I guess a ascending broadening wedge or a megaphone pattern here. Okay, so yeah, but overall, yeah, look at where we are. We are right here, boom, in this trading range. Bam, 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 bam. Okay, so when it comes down, it might bounce right back up to 170. It's very possible, okay? Right back to the middle of the range. Let's take a look quick at the dollar. Dollar didn't do much. Neither did the S&P 500, just down slightly on the day. But what I did find interesting was just gold, right? Obliterated, down 1.97%. But that's a big move down nonetheless. And this could have been potentially a bear flag. Bam, and we just cracked down. Now we're heading down lower. It's a very strong possibility. But, that ain't nothing. Look at also silver. Silver also big down on the day. So these are, the safety trades, right? The hedge, the protection, and there was no where was safety today, right? And gold was down, silver was down. Okay, was it Bitcoin? Well, let's take a look. Cellular shift ratio still not turning up. It's actually turning down, getting pretty aggressive to the downside. Ladies and gentlemen, be very careful. It would be super cool if this just turned into a big hammer candle. Boom, 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 boom. And then just everyone just got freed up. But, and then just started making some crazy good money, especially people that are in long. Because that's a big, nasty drop. And this, like I've been saying, Could have been flagging, and now we're breaking down. So, and this is still turning down. All right. So no matter how many bullish narratives you put on it, the most bullish thing that you need to happen and need to see is for price to confirm. Price, meaning the chart. You need to see price go up. Those are the best indicators. Ethereum came down to the 200-day moving average. It's not holding up right now. It came down, extended through it, and came back up, and now we're slightly below it. Can that change? That can obviously change, but that's also signaling because, right, it's an upsloping 200-day moving average. So Ethereum would be the better play here. However, it's still below. It's still underperforming the SPY. Okay? Bitcoin is too. And now we're getting below that 200-day moving average. So just, once again, be very careful here. Okay? I know a lot of people want to just buy the dip, but we've seen charts just continue to break down. Okay? So if you're buying the dip, I'm just averaging down without a care in the world, there'll come a time, like there's a saying that says, if it doesn't scare you out, it'll wear you out. So if we get a hit to the downside, no, whatever, I'll just buy some more. And then it just goes sideways forever like that, like the IWM right now. It might wear you out to a point where you're like, okay, where's the next opportunity? Maybe I'll just take this money out and I'll go put it over here. But you're putting it out in something when everything's moving up again high. And all of a sudden it starts going down. You're like, I should have kept it in Ethereum. And then Ethereum starts ripping. And you're like, oh, God. And then you just get into this vicious cycle. Okay? So you gotta be managing risk 100% of the time. If you take a look at the daily time frame for Bitcoin right here, did I already have this chart up? No. Yeah, still below that S&P 500 relative strength line, below the 50-period moving average, and we're starting to crack down there too as well. Kind of trying to find some bottoming tails right here. So if we start turning back up, good, but we're still below all those key moving averages. Okay, going a little bit longer than I want, but stay till the conclusion because I want to wrap it all together. This is Michael Saylor's beta rotation strategy. We're looking at XLU over SPY with a 4-week rate of change. When this crosses above 0, that is the risk off type environment for his specific strategy. All right, and you can see here, once it's crossed above, SPY hasn't gone anywhere, and we've just seen some volatility in the markets, okay? And we're still there. We're still up, and from these, since early November, utilities has been outperforming the SPY, and that's a defensive sector. So as it stands right now, take your foot off the gas, okay? That's what it says right now. Take your foot off the gas. If you're trying to be safe, look for low beta names, low beta stocks, even if Kathy Wood starts seeing these big bounces in her ARK fund, which it looks like it could potentially bounce here, but it's dangerous. It's been getting completely obliterated last year. I don't know why I went into that subject. Now, a lot of people have been asking about the sell signal. The sell signal, it gave us the warning sign, but it's so hard to determine if it was triggered. I'm going to go ahead and mark it as a trigger, that it actually did, because it reminds me so much of 2020, the way it triggered. It basically touched it and then turned right back up immediately. All right, so when we went over the sell signal, we're like, thinking that, okay, there's the warning, and then the very next day, it ticked back up. And unfortunately, this thing, it's the next day, like basically next day it loads. Like today's the 5th. No, today's the 6th, but it's only loaded to the 5th, all right, because it takes a while to compile the data. It's probably going to be loaded by the time I'm done recording this. Okay, but it turned right back up, and now it's starting to spike right back up even higher right here, the CPC thing. So that was technically the sell signal, and we did see some selling take place. So the warning was the warning warned us to say, put your foot off the brake. We didn't get a move like this where it came down and we had some time to think about it, right? Because when risk happens fast. And then bam, then it crosses over and like, yay, it worked. Not this time. This time it gave us the warning and just said, vlap, okay? But there were so many different things taking place. There was negative divergence on multiple signal charts. There was overextensions on signal charts. There were so many different things and ideals lining up in the favor to basically say, take your foot off the darn gas. If we take a look at the VIX right now, VIX could be potentially flagging right here. Okay, it came up, filled this gap. That's why I have it white. So now we have the risk remains these 3 gaps above us. That can bring the market obviously down further. But overall, it was down on the day and the markets were down on the day. And we'll see what happens tomorrow. I mean, the only thing from a technical standpoint is this potentially being a flag. Okay, that's all I'm looking at. If it starts breaking out at a rapid rate of change, we can see some more sell side right out of the gates. Now, let's wrap this up with a conclusion, with kind of putting everything together. If we look at the S&P 500 seasonality chart from a midterm election perspective, is anything off skew here? Answer, no. Typically in January, you get this move up and then you get a sell-off. Whee! And then you get a bounce. But you don't get new highs in January, if you can see, okay? So what I'm painting the picture of right now is we might be in store for the potential bounce. Maybe not, but it seems that way, right? We're coming down in January. It's still really early, so it could potentially, I wouldn't pay attention to the percentage points necessarily, just kind of watch the rhythm of the chart. But we came down. It was a pretty aggressive move to the downside. Maybe we get a little relief bounce, but look at what that relief bounce does. It actually brings us to another low. All right, so what we've been saying is basically pay attention for this big, huge pull of volume, this big price action move to the downside with big volume, and then a potential rally, but on smaller volume, and then that could be forming a bear flag, okay? So we're not out of the woods yet, and I don't see the greatest setup or trades to be taking unless if you're very tactical intraday. And as we're starting to see these bonds, the yields kind of hit resistance, and then we see the TLT come into a bottoming type pattern. If that starts moving up, I think that'll help with the potential, relief of the 10-year yield come down a little bit. Maybe we see a little bit of relief movement for tech. Maybe they stop falling as hard. Maybe they move up a little bit. Things look decent. But if you're paying very close attention to all of this stuff, it still does not tell us that we're out of the woods. And what happens after that? Well, we move up a little bit more towards the end. We take out that one, and then we kind of just go sideways to February. And what's in February? Why all of a sudden do we rip up higher into March? Earnings. So do you think earnings are going to be good? I mean, probably, right? So if we get a huge report on earnings, maybe that's going to propel us into March where we'd see some more opportunity take place and potentially even into April, make another high there. But then it gets pretty bleak for the remainder of the year. So take advantage of it while you can, and then be aware of what takes place, more of the mid-year up until, early October. All right, everybody, that's all I got for you on today's episode. Those are just my thoughts, my opinions. A lot of people say you're this, you're that. You told me you'll do that. No, I want to present both bearish cases and bullish cases on this channel. That's what I do. All right, and I just give you my thoughts, and hopefully it helps out. That's all I got for you on today's episode. See you later.